Paul, folks in our community were asking for an update on Intel. This is the world's largest chip maker, one of your favorite companies. Do you own Intel currently?
I do own Intel stock, and I'm trying to buy more.
We've discussed Intel in the past because it's one of these companies that went bonkers in the tech boom of 2000. And if you just look at the 1 year or 5 year chart, you might think it might look normal, wonderful company. But when Paul pulls up this max chart for Intel and its past, it's one of these companies that, Paul, I love when if I would have told you that over the next 20 years, Intel's revenue would go up 5x or even 10x.
Can I explain that?
Please do.
So first off, guys, follow us on Instagram. We appreciate it very much. So guys, this is the max chart on Intel. This is 2000. It was 75, 80 bucks a share. If I had told you back in 2000 that this company, their revenue would go up by 3 times, their profit would triple or quadruple, but the stock would be down, what would you tell me?
You're nuts. You're wrong.
Yeah, you'd be like, Paul, it's a growing company. It's going to do better. But that's the point of overvaluation. It was selling for more 20 years ago than it is today, even though it has 3 times the revenue, 3 times the profit than it did 20 years ago, right? This is what I mean by if you overpay for a great idea or great company, you can still lose money and still do poorly. It got as low as, how low did it get? 14 bucks a share in 09 from 80 bucks. And then since 09, it's up to 53. One thing I like about Intel is look at our revenue growth here. It's just consistently plugging away, going up higher and higher and higher, right? 8 pillars. It's an 8-pillar stock.
Oh, wow.
So for those of you who are new to the channel, what we do is we go through and first things first, 5-year PE. This is only 12.25 times the average profit of the last 5 years. So you take all the last 5 years profit, add it together, divide it by 5 as an average, and you're looking at 12.25. Return on invested capital. Guys, they make 12% return. We look for 9%. That's a check mark there. Mm-hmm. They're paying a nice dividend that they can easily afford. Their 5-year average free cash flow is $15 billion. They only spend $5.6 billion on their dividend.
I totally forgot about that dividend. Not too shabby, huh?
2.6% is double the market right now. Okay? Income statement. Revenue growth, $61 billion to $77 billion.
Pillar number 4 is profit growth over the past 5 years we want to look at.
$12.7 billion to $18.6 billion. It peaked at 23.6. And number of shares outstanding. Guys, they're buying shares back like crazy. 4.7 billion down to 4.05. 10 years ago, they had 5 billion shares. They're down 20% number of shares, which means if you owned a share 10 years ago, you get 20% more of the revenue and profit today than you would have 10 years ago, just by them decreasing the number of shares. Now, this software we did create because our users asked, how are you getting this data? They wanted the data. So I created the software, very simple. You get a mobile app, 8 pillars, 30 years of financial data, stock analyzer tool, exclusive daily content, access to all of us, all of this stuff, guys, a community of over 6,000 people who can talk for 90 cents per day. 90 cents per day, that's it. This will make you so much more money than 90 cents per day. Our competitors, $199, $199, and $35 a month, and you don't even get everything here. No brainer, go to everythingmoney.com or click the link below for Patreon. It's a no-brainer.
Paul, I just looked up on YouTube. It's an amazing journey we've been on. On November 4th, 2020, that was the first time we put out a video about the 8 steps on how to analyze a stock. So we're almost coming in on our 1-year anniversary of these 8 pillars. So
that's wonderful.
Keep going. Pillar number 6 is total long-term liabilities divided by 5-year free cash flow.
So what we do here, guys, is I go to the 5-year free cash flow number, $15.3 billion. I multiply it by 5, and that is $76.5 billion. So what I want is all long-term liabilities to be under 76.5. Why? Very simple. If a company has more debt versus less debt, it's more likely to go under. Less debt it has, less likely it's to go under. Okay? So I go to the balance sheet, scroll all the way to the bottom, $44.55 billion. Massive check mark. Almost half what they're allowed to have. What we want in this metric.
Free cash flow is pillar number 7.
Now, free cash flow. Free cash flow, 11.8 to 16.3. That's a check mark. It is down from previous year, but that's okay. And I do think they're going to be taking away their free cash flow and probably decrease it while they try to invest back into the future, because I do think that they are getting pressure from the AMDs and the other chip makers of the world to kind of get some more excitement in their portfolio. So I do think the 15 billion, what we do here is we take that, we multiply it by 20. That's just an arbitrary number. It's not arbitrary. We sit there and say, hey, what's the average free cash for the last 5 years? Let's multiply it by 20, see what we get in terms of a value as a starting point. $300 billion. The company's currently 220.
Yeah, 216.
216, check mark.
Wow, look at that.
Right? So that's part of the 8 pillars here. Does that mean that we should be paying $300 billion? No. What we're going to do then is, part of our software is, we're going to go to the stock analyzer tool. While Mo is out there doing his charts, I'm going to input some assumptions, and it'll tell me, because it's just math, what should I pay for the company? Because every company is the present value of all its future cash flow.
What this software does, folks, is it provides an initial stock screener. Someone says, hey, they bring up this company, Intel. You can quickly look at the 8 pillars. You know, Charlie Munger says, Paul, he can spot a great deal in 30 seconds. So when these other channels, go ahead.
I've always told people, when it comes to like stocks and real estate,
Sure.
you show me the financials and I'll look through it and go, is it a stable company or not? Is it in the ballpark of realm? And I'm not saying that I know the exact dollar, but when you're used to it, you sit there and say, yeah, for a piece of real estate, give me a rent roll and give me a ballpark on the taxes and insurance, and I'll tell you very quickly if your number is reasonable.
If these other YouTube channels are telling you to read a 40-page 10K and listen to conference calls prior to even looking at a company, they're just straight, in our opinion, wrong and wasting a lot of time. But if you want to trade this quicker with Mo, you can join him in the Bidnast Nation. Go ahead, Mo. What is people doing with Intel?
So this is about a 3-year chart that I've zoomed out to. And if you see this red line that's drawn through there, that's really a kind of a halfway point between, and we've had a lot of gaps happen at that level. So what that means to me is it's a very strong support and resistance level depending on which side you're on. Right now, we happen to be on the level of going down, and it's holding a nice support level. So that to me is a big indicator. So what I think is going to happen is we're going to kind of bottom out here around $53. Now let's zoom in a little bit further and pop this out. So it was a dog stock. There's no doubt about that. It came down through the sweet spot. It coasted sideways for a long time. It tried to pop up, didn't have the volume to, because of everything that's going on in the tech space right now with interest rates, et cetera. So it needs volume. To me, you have to be very, very, very patient with Intel from a trading perspective. You're stuck under all of these moving averages. You have declining volume coming in. You really need to get really what drives everything. It's volume.
Yeah, the volume.
We need volume. That's really what all of this analysis of Intel comes down to. You need to have volume. So when you get that, then you can take a look at it from a long-term perspective.
Well, it's probably pretty high for the.
Yeah, I mean the average volume
Intel's got to be high volume.
19.7, but you can see if you just
and you want 1 million and you're getting 19.7.
Yeah, but this yellow line, I mean, the problem is if you look here,
decreasing volume?
It's just declining in volume. That's the issue. So once you get that incline coming again, then you'll be pretty good from there.
Paul, what should we be
kind of like the incline on my treadmill when I'm
That is cute when you do that.
Correct.
sloshing my weight.
Peloton. Go ahead, Paul. What are you doing?
Ankle weights.
So I'm looking at 10-year analysis for Intel.
Ankle weights.
The 10-year analysis for Intel.
Do you think you'll be wearing ankle weights and New Balances like an old dad someday soon?
No.
And Mo the little
the New Balance that every old man has, the like New Balance 405s.
And the high white socks.
Yeah.
That'll be Paul.
I do the high white socks.
Halfway there.
What was that?
Halfway there.
Halfway home.
You're right, I am halfway there.
Go ahead, Paul.
So I look at a 10-year analysis on Intel. And the reason being is I don't think Intel is going around, so I want to invest in the long term with them. So here are my assumptions. 1.5%, 2.5%, 3% revenue growth. Share change, -2, -2.5, -3. Profit margin, I went lower than the last 10 years. Free cash flow margin, same thing. PE and price of free cash flow. 12, 14, 16. Guys, the bottom line is it's still a large company with not a lot of growth potential, so you can't pay a big premium for it.
Yeah, the 5-year PE is 12. The trailing 12-month PE is 11 something. So
now what I'm doing also is I'm putting my desired annual return at the same thing for every single level.
why is that?
Well, because I still want to look at 12.5% returns, and my conservatism and my margin of safety will be in the numbers up here.
Okay.
So if I go 15% here, I'm almost like totally beating up the lowest assumption. I hit analyze, the company's currently at $53 a share. I look at this going, yeah, I like this.
Oh boy.
High 50s, and I can expect to make 12.5% returns, and even at $47. So I look at this going, yeah, I like this company. I want to accumulate shares of it. Yeah, I just like it. I just think to myself, I'm accumulating shares. I'm selling puts on these things at lower prices to sit there and accumulate more shares as time goes on. And one thing to keep in mind, Intel is down from, look at its 1-year chart.
$60.
No, 70 something, I think.
Yeah,
$68, you're right.
Wow.
Down to 53. This is what happens, guys. Look at this. This went from a low of 44 to a high of 68, and now down to 53. Okay.
If you're at home buying these stocks and just hoping they go up, that was me for a long time. But the key to the stock analyzer tool is that Paul, you've really ingrained this in my mind, is let's start thinking about these investments not as hopeful, futuristic, hopes, and more like this is an investment like a real estate.
Like you're buying a company, like you're actually buying a piece of a company.
And what will my return be? And if the return is not good enough because you're paying too much, then you should probably avoid said investment. Wouldn't you agree, Paul?
Absolutely. And guys, even though you're not getting the money directly, when the company brings money in, it's going to buy back shares, pay out dividends, pay down debt, or make acquisitions to make the company better. It doesn't matter that you're not getting the cash in your hand. Because a lot of people say that to me. Well, Paul, I'm not getting the money in my hand. Well, you are essentially, because you own a piece of a business, and the business financially getting better as the cash flow gets better, right? And that's what you have to focus on. It's hard to understand that, but I always tell people, if I told you there's a company today with $0 in its bank account, and in the next 10 years, that bank account's gonna go to $1 million, and they're gonna be generating $200,000 a year in cash flow, is the company gonna be worth more than it is today? As long as you pay a reasonable price today. Answer is yes. That's what you have to focus on. You're buying a piece of a business.
Stay tuned. We will update you on Intel over the next month or so, as always. And one of our favorite stocks. You said you do own it, right, Paul? So
I do own it. I'm trying to buy more shares.
That's what take final thumbs up. Join the Everything Money community below. You can get the software, and we're giving away a Tesla in about a month and a half, Paul.
We're going to hit 100,000 subscribers here, probably around November 20th. And guys, don't forget to follow us on Instagram.
See you next video. Thanks.